I'm looking at your press release. This is fresh information. So talk us through briefly what this first phase response is from the IFC and what it hopes to achieve.
Yeah. So thanks so much for having me. When the crisis hit, this was a playbook that no one had seen. We didn't have a playbook. Governments didn't know exactly how to respond. But the one thing that we had known from previous crises is that the SME sector is typically very hard hit. They don't have access to capital the way large corporates have access to capital. They don't have buffers. And for them, it's pretty much sort of a just-in-time, both working capital and inventory. So the first and most important thing that we focused on was how do we keep the trade supply chains open? So we stepped up with providing additional trade finance of about $300 million in Vietnam, which is a major supplier. And we followed that up with SME support through commercial banks in a number of countries. And the objective really was how do we get capital to SMEs who are probably the hardest hit and have the least ability to bounce back from a crisis like this. We've also looked at sectors like healthcare and tourism, because both on the positive and defensive side, tourism is a major job creator, and that's a sector that's been hard hit. So it's important that we keep it alive and kicking. And healthcare is what's sort of the positive story that really healthcare companies are going to see a lot of growth as a result of this pandemic.
Talk to us about trade finance specifically. I think, the SME story is one that's garnered a lot of attention. I think the trade finance part, which you see as an issue and still needing help, not so obvious a risk. Talk us through what's needed there for trade financing.
So, based on what we saw in the global financial crisis, when the entire liquidity of the global financial system was getting choked, one of the first things that was hit was trade. And especially in the smaller markets, because what banks will do first and foremost is, because there's a risk aversion, they'll start cutting lines in some of the smaller markets. And that's where we said it's important to keep those trade facilities open and keep that whole supply chain moving. So it wasn't as bad maybe as what people thought it would be. But having said that, we are seeing risk aversion. We are seeing a pulling back of lines by commercial banks. So that's where we're stepping in and increasing trade finance for our client banks in many of the markets in Asia Pacific.
And Vivek, you talk about some of the monetary and fiscal packages we've seen in the first half, which have been unprecedented measures, of course. Are there still some gray areas that perhaps these types of measures are not really addressing the needs of financing that the SMEs and these supply chains really need at the moment, especially at a time when we're reaching that kind of peak central bank sort of response in the second half as well? Does that mean that, the World Bank as well as the IFC is going to have to step up in terms of giving out more aid?
So I think you're right. I think we will have to step up as IFC, because what's happened is that central banks and governments, they've pumped in a lot of liquidity, both fiscal and monetary policies have been loosened. But for capital to reach SMEs, that's probably considered, and I say considered because I don't think it always is, a very risky part of the market. So typically what we're seeing is a flight to quality. So banks prefer to continue to support large corporates, but capital is not reaching where it's most needed today. And governments have stepped up by providing some sort of risk mitigation measures. And that is an area that we're also stepping up in, is to work with commercial banks and also directly bear some of the risk of the SMEs rather than just provide capital, because that is really the need of the day. How do we try and mitigate some of the perceived risks that the SMEs are offering today? So that's what we're going to be working on in phase 2 of our COVID response.
Yeah, Goldman Sachs just came out with a report saying in the U.S. that a fourth of the temporary layoffs that they've seen are probably going to be permanent. What are you seeing in your region, in East Asia in particular here? Because obviously SMEs are a big part of the economy. They employ a big majority of the workers in the region as well. Will SMEs actually survive in the second half? And are some of these job losses permanent?
I think some of these job losses will be permanent. And when I say permanent, means the recovery is going to take at least 2 to 3 years. So it will be quite some time before I think these jobs can come back. Now, so it's very hard to say because country by country, we're seeing very different situations. But one sector that's been very hard hit, for example, is tourism. And tourism, for every direct job, there are, I think, between 6 to 8 indirect jobs. And a lot of the SMEs are actually supporting tourism. So some of those jobs, I think, may take a little longer. On the positive side, when you look at tourism, I think countries are focusing a lot more on domestic tourism. So I think if domestic tourism can pick up, it will probably mitigate some of this. But I think all this is dependent on, we haven't yet seen the bottom in many countries. And we've had, as you know, second waves and third waves coming back. So until and unless we see the bottom, it's very hard to look into the crystal ball and gaze exactly where we're going to come out there. On the positive side, let me also say that some of these job losses that are happening are because people are finding solutions through technology and digital solutions. So the whole e-commerce space has really picked up as a result of this. So some of the job losses which may take place in the traditional sectors of the economy, I'm hoping will be compensated because of the increased focus on digital and technology solutions.
Vivek, final question for you. You talked about phase 2 briefly earlier, a couple of minutes back. Tell us more. How much more is coming? Who is eligible? And roughly tell us, what kind of interest rates are these SMEs facing if they do, of course, are eligible for those loans?
So we're still working on it as we speak on the SME response. And we're coming up with clear criteria. And obviously, we'll be looking at SMEs, which we think have a much higher probability of overcoming this, of coming through this current crisis quite well. And those would be possibly linked to areas like tourism, certain kinds of supply chains, which we're already seeing pick up. Any supply chain related to pharmaceutical companies or healthcare companies is bound to pick up. So that's what we're looking at. Yeah. And we can't get into interest rates because it varies from country to country, and it also varies on the risk profile. So we're doing a lot of work in that space as we speak here.